All right, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. And before we start, let's take a quick look at the disclaimer. And please take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a quick look at the economic calendar for this week. There's got a few things going on. We've got ISM Services PMI up today on 5th of August, Monday. We also have the Reserve Bank of Australia, or the RBA, releasing their monetary policy statement tomorrow. And of course, we have unemployment claims as well, along with other pieces of data as well. Right, so at 2 p.m. GMT later today, we will get the latest July's report on ISM services. And we will see it is expected that this sector is going to rebound back into expansion with a reading of 51.4. So out of the last 3 months, we have seen 2 months of contraction. We saw the ISM services PMI contract in June and April. May was a expansion month, and for July, we're expecting this sector to once again to rebound back into expansion. Now, the RBA will release its monetary policy statement tomorrow, Tuesday, 6th of August at 4:30 a.m. GMT, where they're expected to hold the cash rate steady at 4.35%, followed by RBA Governor Michelle Bullock's press conference at 5:30 a.m. We've also got employment data out of New Zealand and out of Canada this week. And of course, we have unemployment claims coming up on Thursday as well. But first of all, let's do a quick review of the non-farm payrolls that were released last Friday by the BLS. So the BLS is the Bureau of Labor Statistics, and they released the employment report, which covers the non-farm payrolls, of course, the unemployment rate, as well as the average hourly earnings. So we can see here over the last 3 months, job creation has slowed down quite significantly in the US, as reported by the non-farm payrolls, with July's reading coming in at only 114,000 versus the estimate of 176,000. And not only that, June's figure was also revised lower, was revised down from 206,000 down to 179,000. And remember as well, at the previous report, non-farm payrolls report in June, April and May's figures were also revised significantly lower as well. So we're seeing downward revisions as we move along for prior months, right? We're seeing downward revision for prior months as we continue to move forward. So this is signaling a potential, a significant slowdown in the labor market, right? We're seeing job creation start to really cool down. And at the same time, we are seeing the unemployment rate edge higher as well, right? The unemployment rate actually stood at just 3.8% back in March, but now has climbed for 1, 2, 3, 4, 5 consecutive months in a row to hit 4.3% in July, right? So we are starting to see significant slowdown in the US labor market, which is bringing up recessionary fears as well, because once the should the US labor market give way or break, right, it's going to have a huge negative impact on consumer spending, which in turn is going to dampen corporate earnings as well, and then that could cause a lot of weaker economic output, as well as a strong correction in share prices of those companies as well. So take note, it can lead to a pretty vicious cycle. So we have to be mindful of what's currently going on as well from a macro perspective. All right, looking at ISM services today, right? So that's coming up at 2 p.m. GMT with a forecast of 51.4. So as you can see here, in April and June, this PMI activity fell under 50. So reading under 50 signals contraction, and reading above 50 indicates expansion. So you can see here, PMI activity for services has been mixed over the last 3 months, and July's data points to a rebound as well. So we're expecting nice rebound into expansion territory later today, and that could help potentially find a floor for the dollar. Remember, the dollar sold off hard last Friday and today as well, along with equity markets, right? Global equity markets have also taken a strong hit today, especially in Japan, and of course with European markets currently trading as well. And we also expect US markets to follow suit, especially with futures falling, US futures falling quite significantly as well. So we saw the dollar sell off, we saw equity market sell off, we've seen bonds rally as well. So should we see a nice strong rebound for ISM services PMI, maybe that could help find a floor for the dollar index later today. Right, then moving on to Australia tomorrow, we've got the RBA, right? They're expected to keep their cash rate on hold at 4.35%. Part of the reason is because inflation continues to remain persistently sticky in Australia, right? So looking at it on an annualized basis, the quarterly reading accelerated from 3.6% in the first quarter of 2024 to 3.8% in the second quarter of this year. Right. Similarly, when you look at the monthly CPI indicator in the first two quarters, you can see it rising quite steadily. The second quarter, rather, see it rising quite steadily. But the latest figure in June shows a slight slowdown as well. But despite that, inflation continues to remain above the RBA's target of 2 to 3%. Right, the RBA has a target of 2 to 3%, and that may be enough for them to continue to keep rates steady at 4.35%. Right, okay, now let's start the analysis on the dollar index, of course, and then we'll work our way down through the majors. We'll cover the commodities such as gold and oil, and of course, we'll look through the indices as well. We'll take a look at the DAX and the US 500 too. All right, looking at the dollar index, we can see two very strong down days, right? Today's candle as well is a big day, a big down day as well, breaking below 103 and testing a key overlap level as well. As a key overlap level that's currently being tested, right? This level stands at 102.61. This is currently being tested right now, so this is the pivot for today. Could we have a potential bearish breakout? Perhaps we could, right? We could have a potential bearish breakout take place today. Right, because the dollar continues to sell off hard as well. But let's look at it with the RSI and stochastic. Okay, RSI has dropped below 30, is with a reading of 28.44. Stochastic is about 17, both of which suggest oversold conditions as well. So maybe we could also, based on these indicators, we could see some consolidation or some stabilization for dollar index today. But take note, if we see a miss in the ISM services PMI report, right, if we see a weaker than expected number, that could definitely accelerate the downslide here, right? We could see further fall and a bearish breakout take place should we see ISM services PMI report come in softer than expected. Right, then this is the pivot at 102.61. We can also try and identify the next support level. The first major support level is quite clearly going to be the swing low that took place at the end of December. Right, we saw the dollar index hit as low as 100.63 in December. So this is where the first support has been identified. We see a very nice swing low taking place here, right? Very nice swing low support level over here. But we can also run a Fibonacci retracement starting from this swing low here on 28th of December, going up to the high here on 16th of April. Let's see if there's anything that comes up. Well, I see an intermediate support level at around the 78.6% Fibonacci retracement as well. Right, this could be a pretty decent area for price to consolidate to find support as well. Right, so take note, if we do see a bearish breakout take place for the dollar index, we can then identify the first take profit, potential take profit zone at around the 78.6% Fibonacci retracement. And of course, should the dollar index continue to fall lower, we could then use the first support at 100.83 as the next potential take profit zone. Now, What about if we see a potential reversal, right? If you see ISM services report coming stronger than expected, that could help us, that could help the dollar index stabilize around the pivot here. And if it does stage a rebound, I see an intermediate resistance level at this pullback level here at 103.24. And I see the first major resistance coming in at around this pullback level here at 103.73. So if we do see the dollar index stabilize around the pivot here and reverse to climb higher, right? A first potential take profit zone or level for the long trade can be identified at this pullback level here at 103.24. And of course, the next resistance comes in at 103.74. This is where perhaps the next take profit level can be identified should we see a nice rebound in the dollar index. Now, we can also run a Fibonacci retracement starting from here, this high on the 26th of June down to today's low here, 5th of August. Let's pull up all the fibs. We can see that the 23.6% retracement aligns pretty well with the intermediate resistance, as well as the 38.2% aligning pretty well with the first resistance here. So let's keep 23 and 38. Right. So once again, we've got ISM services PMI coming up today. We've also saw very poor, or not very poor, I would say worse than expected jobs data out of the US from last week, right? We had JOLTS job openings on Tuesday, ADP employment report on Wednesday, unemployment claims on Thursday, and of course the non-farm payrolls and unemployment rate last Friday, all signaling or all confirming a significant slowdown in job creation and cooling of the labor market in the US. So that's triggered a strong sell-off for the dollar and a strong sell-off in equities as well. Right, so should we see this bearish breakout take place? So we have a, for today, right, with the dollar index trading exactly at around the pivot at 102.61. If we do see a bearish breakout take place, you can then identify a potential first take profit zone at around the 78.6% Fibonacci retracement. And of course, should this index continue to fall lower, the next take profit zone can be identified at the swing low that took place at the end of December at 100.83. Now, what could accelerate the downside here if we see a worse than expected ISM services PMI result later today, right? So if you see a services PMI miss, right? If you see if you see this PMI report miss its market expectations, then we could see this downslide extend even further. But of course, on the flip side, if we see a stronger than expected services PMI report, it could help the dollar index stabilize around the pivot and maybe stage a potential and stage a minor rebound as well. But for now, the bias for the dollar does seem to be to the downside, of course, right? We're seeing a series of lower highs and lower lows. And when you look at it on a weekly time frame as well, we have seen now just at the beginning of this week, we are seeing two strong, even with the first trading day of Monday, right? We are seeing two very strong down candles already so far. Right, and if we zoom out a little bit further, there's a nice uptrend here. We can see that took place on mid-July of last year all the way till October. We can run a Fibonacci retracement here from here as well. 14th of July, going up to the high here, 3rd of October. Believe there should be a 61.8% that we can use. No, not 61. Yes, the 61.8% Fibonacci retracement aligns pretty well with the pivot. And perhaps is there a 78 that we can use as well? 78 not so much, so let's just keep 61. So we can see here we have a pretty strong overlap level here that's currently being tested. Right, despite this being a significant overlap level that has the presence of a 61.8% Fibonacci retracement, remember the bias is still to the downside, so we could very well see a potential bearish breakout take place at some point today. Right, so these are the key levels for the dollar index on the daily time frame, right? And looking at the momentum indicators such as the RSI and stochastic, RSI dropping below 30 seems to suggest oversold conditions, but stochastic is still at around 18 as well. Hasn't reached its low over here. It's low, has a low of like negative reading here. So should we get closer to this lower bound here, that maybe and along with RSI also indicating oversold conditions, then maybe we're likely to see the dollar index stabilize and find the floor. But for now, it looks like there still could be further downside action for this index. All right, then let's move on over to the Aussie, right? Since we've got the RBA coming up tomorrow, let's take a look at the Aussie. Then we'll look at dollar yen as well, and then we'll move on over to the commodities. And of course, should you have any requests for any other instruments, please do drop your requests in the chat box early, and I'll be more than happy to go through the analysis with you. Right, looking at uh, the Aussie today, right, we saw the Aussie break below this pivot level today at about 5 a.m. GMT, right? So before that, like just as markets open, we had identified this level here at 64.69 as a potential pivot level here. We're expecting the Aussie to hold around this level here, but it's actually broken through quite cleanly. So we've actually seen a bearish breakout sort of take place, but price also reversed quite strongly as well, right? So the bearish breakout took place. When you look at it on a 1 hour candle, right, the bearish breakout took place at 5 a.m. GMT, and in the next hour it hit as low as 63.49 before reversing to retrace a little bit higher, but it continues to trade underneath the pivot, and that could mean that we are likely to see this downward action resume once more as the US markets come online. So take note, bearish breakout has taken place here for the Aussie, and it's quite likely we're going to see this currency pair drop lower. Now, despite the dollar index itself being very weak, we can also see that the Aussie is actually even weaker, and it's continuing to drop, and it dropped very sharply today as well. So take note, don't be fooled by the dollar index, right? The dollar index is indeed weak, but the Aussie is even weaker. When you look at the Kiwi was actually retracing higher, but then it dropped again today very sharply, but has retraced a little bit higher as well. Right, okay, so with the Aussie breaking through this pivot level here, the next major support, of course, is this swing low that took place here at the on 9th November of last year, right? This is a strong swing low support level here, and this is where price had bounced off, right? It touched exactly at the first support and retraced higher today, but with the Aussie continuing to trade underneath the pivot, when you look at it on the 1 hour time frame, I think the bias is still to the downside for this currency pair here. Right, then looking at stochastic and RSI, right? RSI has dropped as low as 22.7. Stochastic has dropped at about 11, right? Both of which are suggesting oversold conditions. But remember, the Aussie really is weak today. So despite these two momentum indicators suggesting oversold conditions, but I think this move to the downside is still likely to last today as well. Right, first resistance, I see a nice pullback level here. Right, we have to run a Fibonacci retracement. So we started a retracement from here. This swing high on the 11th of July going down to the low of today. Right, let's pull up all the fibs. There should be a 23% with the pivot, I think. Yep, that's 33% at the pivot. And about, I probably see a pullback support level here at around, or pullback resistance level at around 50%. So let's keep 23 and 50. Right. Okay. So we can see a bearish breakout currently in play. So should we see the Aussie continue to fall lower, right? We can definitely identify a potential take profit level close to the first support here, right? So anywhere from about, right? Should we see the Aussie resume the downslide? So anywhere from about 63.90 and below would be a good area to identify as a potential take profit zone for any short Aussie trades that you may have. Right, let's see if we can run a Fibonacci retracement from here. This swing low on 26th of October 2023 up to the swing high here on the 28th of December. Is there any 78.6% retracement that we could potentially use? Nope, we can see that it bounced off the 78.6% in April, and then once again it's broken through here. So that I think because we've seen it break through this level twice, right? We see this wick dropping as low as 63, 62 on 19th of April, and of course this wick here touching the first support. I think this 78.6% really doesn't have any significance anymore, so let's not include it in the analysis. Right, okay, so now, yeah, okay, so these are the key levels for the Aussie on the daily time frame, right? And when you look at it on the 4-hour time frame as well, and we can see it continuing to trade underneath the pivot here, so we could likely see this currency pair drop lower. All right, hi Wasim, right? You got a question on yen as well. All right, so let's cover that as well. Right, part of the reason for the yen strengthening is also there's quite a few things going on. One is we had the Bank of Japan raise interest rates last week, and at the same time before that, in the second week of July, the Bank of Japan also intervened in the open currency markets, right? They carried out intervention measures. So what they're doing, or what they did back then in the second week of July, was that they were selling their foreign treasury holdings, which consists of the US dollar and US treasuries, and they were using the sales of those proceeds to buy back the yen in the open market to prop it up. So as you can see here, the dollar yen has weakened quite significantly. When you look at it on a weekly time frame, it's gone from as low as 130 in February of 2023 to as high as 162 in July this year. So when the dollar yen moves up very strongly like this, the Japanese yen becomes very weak. Now, this can have several implications. A weak yen makes Japan's exports cheaper for the rest of the world and makes inbound tourism cheaper as well, right? So as a tourist going to Japan, things become noticeably cheaper. So that's the positive aspects of a weak yen, which is what we saw when dollar yen hit 162. Remember, Japan's exports becomes cheaper to the rest of the world, so they can sell more stuff, and at the same time, there's higher inbound tourism as well due to the weaker yen. Now, those are the positive aspects. The negative aspect is a weak yen reduces the spending power of the Japanese consumer, right? When you have a weaker yen, you have less spending power, and that also can cause inflation to pick up as well. Right, when domestic goods become more expensive, Japan's imports become more expensive, sorry, right? The exports becomes more cheaper, but imports become more expensive. That could have an impact on inflation as well. And also we had intervention measures take place. And of course, last week, which was 31st of July, right? Was it last week? Yes, it was last week, 31st of July. We had the Bank of Japan raise its interest rates as well, right? And taper its bond buying program, which has significantly strengthened the yen. So this is what we are seeing as we speak. Right, and also because equity markets are also selling off hard, the Japanese yen usually is also a safe haven currency. So that means in moments of or in periods of high volatility and market turmoil, the Japanese yen is also going to be bid very strongly. So there's stronger demand for the Japanese yen as well, which is also causing dollar yen to pull back very sharply. Right, Wasim, I hope that explains it gives you better context of what's currently happening with the yen, and of course what's happening with dollar yen, and of course all the other yen crosses as well. All right, now back to the chart here on the daily time frame. So with dollar yen dropping like a rock, where is the next potential support level? We've seen it break through many significant levels so far, right? Let's start a retracement from here, 28th of December, going up to this high here. Let's pull up all the fibs. We can see that previously this was a pretty decent pullback support level here at around the 38.2% retracement level, but that was taken out last Wednesday. There was also another nice overlap level at around a 50% retracement that was also taken out last Wednesday. There's a nice pullback support level here at 146.40 that was taken out on Friday, and you can see it's just been smashing through every single major support level as well as retracements as well. Now the next major support for the dollar yen looks to be around here, right? Looks to be at around 140.60. This is where perhaps it could at least maybe temporarily slow down, right? I'm not saying it's definitely going to reverse off this level here. I'm not, yeah, but it's quite likely it could slow down here, find some temporary support, but the bias for dollar yen is definitely to the downside, right? It's a very strong downward momentum for this currency pair, right? So you can see it smashed through every single retracement level as well. So we can't use any of these. And the first major support for, as I mentioned, for dollar yen is going to be here at 140.91, right? This is the first major, like a swing low support here. We can identify this as a pivot. Perhaps we can see it stage, or I was probably not going to stage rebound here, right? But it could consolidate around this level, right? It's quite likely we should see it consolidate around this level here. Now we can also run one more Fibonacci retracement starting from this low here on January of 2023, going up to the high here on July. We can see that this pivot level here also has the presence of a 61.8% retracement, and the 76% is a little bit lower. For now, we don't really need the 78.6%. Let's just keep 61. And the next major support for the dollar yen looks to be at this overlap level here. There's a nice overlap level at 137.79. Right, we can see previously this level functioned as resistance in December of 2022, resistance again in March of 2023, and then resistance again for the third time in May of 2023, after which it proceeded to function as support on 22nd May 2023, 14th July 2023, and then 28th July. So this creates an overlap level here at 137.79, which has been identified as the first major support. And the pivot is identified at here, 140.96, which is a swing low support here, and this is a level where dollar yen could potentially stabilize. Now, what this pivot level also means is, should you have been shorting the dollar yen since last week or even as early as today, right? You can see even today, dollar yen opened at about 146.50. It's dropped almost 430 pips, right? It's dropped almost 430 pips in a single day, and it looks to be getting closer to the pivot here. So you can identify a potential take profit zone at around 141, right? The pivot is at 140.96. We can identify a potential take profit support zone, a take profit zone for the short trade at about 10 to 20 pips above this pivot here. So probably around 141.15 would be a good area to identify take profit, which you're getting very close to it as we speak. Right, what about resistance? Right, I see a pullback resistance level here at 146.42. Right, previously this level functioned as a support. We can see it finding support here on 1st February and then finding support here on 11th March. Once this level got taken out today, right, a previous support level like this can now potentially function as resistance. So that's how we found the first resistance for dollar yen. Right, hi Ren. Okay, yeah, right. Actually, we just covered the Aussie, but no worries. We'll cover it once again once I'm done with dollar yen. Right, so these are the key levels for dollar yen. Right, we're seeing very strong bearish momentum and bearish price action as well. So the first take profit level for dollar yen can be identified at the pivot, which is at about 140.96, and the next and should dollar yen break through the pivot and continue to slide lower, the next take profit level can be identified at around the first support at 137.79, which is an overlap level here. All right, let's go back to the Aussie. Right, take note, we've got the RBA coming up tomorrow. That's at 4:30 a.m. GMT time, followed by the press conference at 5:30 a.m. GMT. Now, the Aussie is very weak as well, right? Despite the dollar index selling off strongly, the Aussie is just as equally as weak, and it actually dropped as low as 63.50 earlier today. It retraced a bit higher, right? It has retraced higher over the last few hours, but it has failed to climb back above the original pivot. So this is where I think the Aussie could potentially stall once again and reverse to resume the downslide, right? So take note, the Aussie continues to remain very weak. It has broken through the pivot level. The pivot levels identified earlier this morning or at the market open. and it's actually made a bearish breakout. It's already made a bearish breakout, and it could continue to slide lower, with the first major support identified at 63.49, which is a swing low support level here that took place on November of last year. Right, resistance is identified at this pullback level here at 65.72, which also has the presence of a 50% retracement. All right, so these are the key levels for the Oz Gene for today, and it continues to trade under the pivot, right? So quite likely we could see this currency pair drop lower. And when you look at RSI and stochastic, RSI is at around 31, stochastic is around 38, right? Not really indicating oversold conditions just yet, right? So perhaps we can see this currency pair drop a little bit. It could, well, we can probably expect this currency pair to slide lower as US markets come online. All right, now let's cover the pound, right? British pound, US dollar, otherwise known as cable. Right, of course, with dollar index selling off hard, we should be expecting to see cable move higher, but actually it has also continued to slide lower as well, right? It's a bit strange, right? If you see dollar index selling off strongly over the last couple of days, we should have expected like Friday, right? We had a nice bounce in the cable, but today we're seeing a down day as well. Right, okay, I see it currently testing intermediate support level here. Right, we can see here last Thursday and Friday, cable stabilizing at around 1.2727. So this is an intermediate support level that I'd like to highlight for today. Right, this is actually, well, you can actually identify this as the pivot, right? We may have a potential bearish breakout take place here. Right, we can see, oh, actually it's trying to find support at the cloud. Okay, maybe we could potentially see finally the cable stabilize around here, right? I think maybe now that I look at it with the Ichimoku cloud on the daily time frame, it looks like it is trying to find support just above the cloud. Remember, when the cloud is green in color, it highlights potential support zone, and usually the currency pair or the instrument can find support just above the cloud or within the cloud itself. And when you look at stochastics and RSI, stochastic is at around 16, RSI is around 40, right? Maybe we might see a little bit more further downside action before cable stabilizes here. The last time we saw this currency pair stabilize was when RSI came close as low as about 7.48. Sorry, stochastic dropping as low as dropping under 7, RSI coming at around 41, and we saw a nice little stabilization for the cable around here. Right, maybe this time round we could see it find some support within the bullish Ichimoku cloud, and should we see stochastic drop lower and RSI drop lower as well, maybe they'll indicate to us a potential oversold condition. So that means we could see cable sort of stabilize, find the floor, and maybe stage a minor rebound. But for now, it does look like it's going to drop a little bit lower first, right? It does look like it's going to drop a little bit lower first before we actually see a reversal take place. Right, so since the pivot is here, what about the support? Right, I mentioned here this is a nice swing low support that took place at the end of June at 1.2622. This is the first major support for cable. We can also run a Fibonacci retracement starting from this swing low in 22nd of April to the high on 17th of July. We can see the first support also has the presence of a 61.8% Fibonacci retracement. Let's look at the 78.6 as well. So we can identify the second support at around the 78.6% retracement here. And in terms of resistance, we can also now run a Fibonacci retracement from this high on 17th of July down to the low of last Friday. When we pull up all the fibs, I see a pretty decent overlap level here at around 1.2858, close to the 50% retracement. This is where we can identify the first resistance, and where the 61.8% retracement is, that's another pretty decent overlap level as well. So we can use the 50 and 61% retracements. right? So that means if we do see a bullish reversal take place for the cable, if it does manage to find support within the Ichimoku cloud or around the pivot here, and if it does reverse to go higher, right? If it does stage a rebound, the first major resistance looks to be around 1.2858, close to the 50% retracement, and the next resistance is at this pullback level here at about 1.2938, right? So take note, the bullish Ichimoku cloud can sometimes function as an area of support, and also we're getting closer to uh, the RSI and stochastic oscillators. RSI indicator and stochastic oscillator indicate potential oversold conditions as well. So if we do see a potential oversold conditions, we can probably expect cable to find a floor as it did on 28th of June, and also as it did on 23rd of April here, right? We're looking for this sort of technical setups, right? Something like this here on 22nd of April, and something like this here on 27th of June, right? Should we see a similar setup like this, maybe that's going to be the first clue as to where cable can potentially stabilize and maybe reverse to stage a rebound. All right. Okay, Wasim, I can cover pound yen, GJ, I believe you mean is pound yen. Yeah, we'll cover that as well. Hi, Bing Bong. We've already covered the Aussie. I'll try and do a quick recap later, but yeah, but we've already covered it for now. Let me see if I got time to go through that again. All right. Okay, so these are the key levels for cable here for today. So take note. Let's look at pound yen. Right. Okay, let's start with a fresh chart. You can see here, along with dollar yen, right? Along with dollar yen, this currency pair is also falling like a rock. Right? There's no bottom in sight. Where I do see a potential strong support level is at this pullback level here at 178.45. This is what we're going to identify as a pivot for today. Right? We see pound yen finding support here on 27th of July last year, October of last year, and also December as well. So it's a pretty decent pullback support level here, which has been identified as a pivot, right? So that means this is a potential take profit zone. So with pound yen falling sharply, you can identify a potential take profit zone at around the pivot here, right? So anywhere I would say anywhere from 179.90 and below would be a good area to identify as a potential take profit zone should you be shorting the pound yen, right? Even if you had shorted it earlier from this morning, right? From this morning as well, it opened at about 187.60 and it's dropped as low as 180 as well. So you can see it's already dropped, as its lowest point, dropped about 700 pips already, and it looks to be heading even lower. Now, when we zoom out a little bit more, okay, for this, we're going to have to go to the weekly time frame here. For the weekly time frame, I think now we can use a Fibonacci retracement starting from this low of January 2023 going up to the high of July. We can see now there's a 61 over here. And what about 78.6? 78.6 is there. Okay, so let's just keep 61%. So this pivot here is also situated above the 61. It's quite a distance away, of course. Yeah, it looks a very far distance, but it's good to know that there is a presence of a 61% retracement here. So this is probably a zone where we can expect pound yen to at least stabilize, right? We will not see a strong rebound of this level here, of the pivot or of the 61.8% retracement, but we can expect it to at least sort of stabilize around this level here. So that means this is a good zone to identify as a potential take profit zone for your short pound yen trade. Now, what about resistance? I see a pretty decent overlap level as well over here at 183.50. This can be used to identify the first resistance here, and I see another overlap at 188.66, so another pretty decent overlap level around there. So this is where we can identify the second resistance. And for pivot, first major support underneath the pivot would be probably, yes, there's a nice overlap around here as well, which is at 172.12. As a take note, we've seen pound yen drop very sharply, and it does look like it's going to at least come close towards the pivot at 178.45. So around this zone, around 180 and below, is a good area to identify your take profit zone for any short pound yen trades. All right, okay, so these are the key levels for pound yen. Let's see, right, that's pretty much it. Okay, let's move on over to the indices. We look at DE40. DE40 is an instrument that tracks the DAX futures, and you can see that this is breaking, making a bearish breakout through this pivot level here. We can see previously the DAX dropped as low as 17,398 on 19th of April, but it reversed very strongly to make an all-time high here on 16th of May. But now today we see this level being tested. We have a potential bearish breakout currently in play. I see a potential bearish breakout currently in play. So that means should we see DE40 fall even further, we can identify a potential take profit zone at around a 50% Fibonacci retracement. So the first support has been identified at around 16,760, close to the 50% Fibonacci retracement. So identifying your take profit zone around here would be a suitable level to do so. First resistance here is at this pullback level at 18,000, which took place in mid-June. Right, and the next support level, let's see if it continues to fall lower. Let's see where's the 61%. Right, the next support level could be, yep, it's about probably here, close to where the 61.8% retracement sits. Right, so take note, these are the key levels here. We're currently seeing a bearish breakout take place for DE40. Looking at it on the 1 hour time frame, it continues to trade below the pivot. Right, we're seeing a nice we also have a pretty decent descending trend line as well on the 1 hour time frame. Right, we have a nice descending trend line as well. So as long as it stays below this descending trend line, we are quite likely to see this instrument continue to slide lower as well, right? So if it manages to stay below the pivot as well as staying underneath the descending trend line, the likelihood of this instrument falling lower is likely to continue as well. All right, okay. So these are the key levels for DE40, right? We'll also cover US 500. Then, of course, we'll take a look at gold as well. Yeah, we'll wrap up the session by looking at the commodities such as gold and the US dollar. Sorry, gold and oil, sorry. So similarly for US 500, we are also seeing it break through a strong support level that has been identified as a pivot. We're seeing a potential bearish breakout take place. Right, this pivot level here was a pullback support that took place on the 31st of May. It also has the presence of a 61.8% Fibonacci retracement. Right, we have a 61.8% Fibonacci retracement. Looking at it on the 1 hour time frame, right, it's broken below the pivot, retraced a little bit higher, pulled back towards the pivot, but looks to be resuming the downtrend again. And similarly here, on the 1 hour time frame, we also see another pretty decent ascending trend line as well. So as long as US 500 stays underneath the pivot and underneath the descending trend line, this is a descending trend line. If it stays below the descending trend line as well as staying below the pivot, it's quite likely that this downside, this instrument is going to likely to slide even lower, slide lower here. And we can see, we can try and see where the 78.6% retracement sits. Right, so should we see this bearish breakout extend even further, right, the first take profit level can be identified close to the 78.6% retracement, which is at around 5,100. And of course, should it continue to drop lower, you can then target at around 5,000 as the next potential take profit zone for the short US 500 trade. All right, so this is what we have for US 500. Right, before we move on to gold, I'm just going to quickly launch a poll. I truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue the session with an analysis on gold as well as on oil too. All right, truly appreciate if you guys can give your feedback with regards to today's webinar. And then, of course, now we'll continue with the analysis on gold as well. So looking at gold earlier today when markets opened, right, gold was, let's see, today's, yep, so gold was actually rising up, right, as high as 2,458, right, gold was rising up as high as 2,450 or 55, sorry, or at about 4 a.m. GMT, but then after that it stalled and reversed as markets had opened. We had identified a potential pivot point close to the all-time high. Right, remember this is the all-time high for gold here at $2,483 per ounce. So we had identified a potential pivot level here. We are expecting gold prices to rise a little bit further and potentially stall, but it actually reversed at around 2,460 and looks to be sliding lower. Right, so with that in place, right, with the gold prices falling, first support now is actually going to be our pivot. Potentially we can expect gold prices to stabilize around this level here, which is around the pivot, and the original pivot that was identified earlier this morning is now going to be functioning as our first resistance, and we're going to identify a new first support. Right, I see a nice pullback support level here, right, at around 2,286. So this is where the first major support sits. The pivot is also a support. The pivot is actually an overlap support as well, and this is where we could see gold prices sort of stabilize here as well. All right, thanks for the feedback, guys. Truly appreciate it. Right, okay. Right, there's also a Fibonacci retracement that we can use. We don't need this extension anymore, but we can run a Fibonacci retracement from here, this low on 26th of June going up to the all-time high. We can see there's a 61.8% Fibonacci retracement that aligns very well with our pivot, right? We see a 61.8 here, so we can expect gold prices to stabilize around this level here should we see it drop even further. Right, we don't need 78.6, that's fine. Right, so looking at it on the 4-hour time frame as well, it's going to continue to slide lower, and 1-hour time frame as well. So I would say there's an intermediate support level around here, right? So I would say this is more like a downside confirmation level. So if we do see a break below this level here, at least for today, right, this may also trigger the next further bearish action as well for gold prices here, right? So after retracing higher earlier this morning at and stalling at 2,460, it has reversed and looks to have stabilized at around 2,421. But remember, a clean break below this level is likely to trigger further downside action, and we could see then potentially come close towards the pivot which is an overlap support level, which also has the presence of a 61.8% Fibonacci retracement. All right, so take note, on the shorter term time frame, right, on an intraday basis, we could see a potential bearish breakout take place here at this downside confirmation level, and we could potentially see gold prices drop close towards the pivot. And should it reach the pivot over the next couple of days, right, this is a nice take profit zone for any short gold trade that you may have. We can also expect gold prices to stabilize here, right? So over the next couple of days, should we see gold prices continue to fall, it could very well stabilize at around this pivot here. Right, looking at stochastic and RSI. RSI is around mid-range, around 55. Stochastic oscillator is also around 64. Right, both do not indicate oversold conditions just yet. Right, of course, it's still well away. The last time we saw strong oversold conditions, highlighted by the RSI and stochastic, was around May, beginning of May, and also approximately around mid-June as well. Right, we saw the stochastic oscillator indicate potential oversold conditions around this period here, and we did see gold prices stabilize and retrace higher. But for now, we don't see that at all. Right, RSI is at about 55 65. Stochastic oscillator is also around at 65. Perhaps we could see a potential bearish breakout take place today, and we could see gold prices drop lower. All right, so these are the key levels for gold. Let's take a look at XTI USD. Right, this is the instrument that tracks crude oil futures, or WTI oil futures rather. Right, so we can also see crude prices in a strong downtrend. Right, it's been a strong downtrend since the second week of July, right, making a series of lower highs, lower lows. Continues to trade within a pretty decent bearish channel, but it is approaching a significant support area now. This is like a multi-swing low support area. Right, we saw crude prices, WTI oil prices, find support here on 5th of February, and again finding support here on the 5th of June as well. So this is a pretty strong support area, multi-swing low support that also has the presence of a 78.6% Fibonacci retracement. So if you have been shorting gold since last week or even as early as this morning, right, using identifying your take profit level at around the pivot is a good zone to do so. So the pivot is identified at $72.31 per barrel. This is a strong multi-swing low support that has the presence of a 78.6% retracement. So this is a good area to identify any potential take profit levels for your short crude oil trades. Now, if over the next couple of days we see crude oil continuing to fall lower, right? If it does fall lower, then we may have a potential bearish breakout opportunity. And if this bearish breakout takes place, then of course we can target the Fibonacci extension at 137% as a potential take profit zone. So this extension level was found by running a retracement from here, 4th of June, going up to the high on the 5th of July. We can see the extension level at 137% aligns quite close to this other swing low that took place at the end of December, right? We see another nice swing low support here taking place at the end of September, which also has the presence of a Fibonacci extension at 127%. So take note, crude prices are approaching a strong support level. It's a multi-swing low support that has the presence of a 78.6% Fibonacci retracement. So it will be quite prudent for you to identify your take profit zone around the pivot. And of course, if over the next couple of days, if we do see crude prices slide even lower, we may have a potential bearish breakout opportunity, and that means we could potentially target the 137% extension as a potential take profit zone. All right, okay, so this is what we've got for oil, right? Okay, are there any requests? All right, okay, Bing Bong had a request for Aussie, so I can quickly cover that. And of course, if there should be any other requests for any other instruments, please do let me know. We can probably squeeze one more in once I'm done with the Aussie. All right, so looking at the Aussie earlier today, this morning, right, as markets opened, the Aussie was trading at around 65 cents, right, at about 3-4 a.m. GMT time, and then at that time we had identified this overlap level here, or this pullback level at 64.69 as a pivot. So what has actually happened today is we've seen the Aussie make a bearish breakout through the pivot here, dropping as low as 63.49, hitting the first support, retracing higher, but it has stalled underneath the pivot once more. So potentially we could see this currency pair resume the downside, and if it does resume the downslide once again, we can then target anywhere from 64 cents and below as a potential take profit zone, right? Right, and then the first major support is a multi-swing low that has taken place in November of 2023 and also here in April of 2024, and this is where exactly the Aussie has bounced off earlier this morning as well. So take note, we can do see a very strong support level here, and if we do see Aussie continuing to slide lower, we can identify a nice take profit zone that begins from about 64 cents and below as a take profit zone for any short trades. All right, thank you so much, Ren, for the feedback and for your compliments as well. Truly appreciate it. Yeah, we really try to give you the best analysis here on IC markets, right? Whether it's on a daily time frame or of the 4-hour time frame, we really try and give you what's relevant and actionable as well for today and hopefully for the rest of the week as well. All right. Okay. So I believe that's all I've got for today. All right. Before we wrap things up, right, just quickly go through the calendar as well. Take note. We've got ISM Services PMI report out today at 2 p.m. GMT time. We're expecting uh, this sector to rebound into expansion with a reading of 51.4. If we do see a stronger than expected result, this could help uh, the dollar index find the floor. But if we get a result that is worse, right, or if we do see another month of contraction for the ISM Services PMI, then that could definitely accelerate the downslide for the dollar index. So take note, a stronger data, a stronger result could help support the dollar index, while a much weaker data, a much weaker result is likely to cause the dollar index to fall further. And then tomorrow on Tuesday, 6th of August, we've got the RBA releasing its cash rate, making its cash rate announcement at 4:30 a.m. GMT, where they're expected to keep the rates on hold again at 4.35%, followed by the press conference at 5:30 a.m. We've also got employment data out of New Zealand and Canada. We've also got, of course, unemployment claims coming up on Thursday, 8th of August. All right, so take note of the calendar for this week as well, and do look out for all upcoming webinars by IC Markets for the rest of this week. Right? We got a combination of educational topics as well on Tuesday and Wednesday. All right, thanks everyone for tuning in. All right, thanks Ajay, thanks Ren. All right, thanks Wasim. Uh, thanks. Great to see you all again, and looking forward to catching all of you at the next session. All right, thanks everyone. Take care and have a great trading week.